All right, welcome back to the channel. That's a lot of greenery, getting us ready for Christmas. So today was a face ripper rally. That's what we're going to call this video. And the reason for that was we had the CPI numbers come out this morning, and the CPI number was cooler than expected, and that is causing yields to plummet. So we have the 10-year yield down almost 4.5%. We've got the dollar. The dollar's plummeting. When the dollar goes up, stocks go down. When the dollar goes down, stocks go up. So the dollar is going down, at least today. And you can see it's breaking trend here. We had to just skyrocket up, consolidate, and now we're making our way down. Who knows where we go from there? But it looks pretty similar to the 10-year yield. And if the dollar and the yields continue to fall, that's great for stocks. So if you've watched my TLT video, you know why this is so important. And I think this trend's going to continue. I've got my little squiggle line here. I do think the yields are going to continue to go down, which is going to provide more lift off for stocks. And also the reason why the yields are going to go down is because people are going to buy bonds. Every time these yields go down, people are going to worry that they missed their opportunity to lock in the 10-year at 4.5%, 5%, which, yeah, you missed your opportunity to get it at 5 unless we head back up here. Who knows if we do. So I think we're in a good spot for the market to continue to rally until we hit a recession. The economy's running pretty well, depending on who you ask. These big companies are in great shape. So there's a lot of small companies that are just garbage, and avoid those at all costs. But if we look at our bull bear case, if we revisit this, the bear case, interest rates. Well, interest rates are going down, so that's not a blaring issue right now. The yield curve inversion, if we take a look at this, we're going to start to steepen again. We're going to start to make our way back up. And once we get past this black line, then we're looking for the recession. Our eyes are ready for it, waiting for it. Now, who knows when that'll be? That could be 24, that could be 2025. We don't know. So that is something that we're still watching. The banks, the credit crunch, that's still a thing. Commercial real estate, that's still a thing. But I am more optimistic on these two. One with the banks, the credit crunch, yields come down, banks will be able to lend a little bit more. And then the commercial real estate, same thing. Yields come down, it'll take some pressure off some of the real estate. And who knows? I think some of hopefully some of the worst beaten up places are going to get, they've bottomed, hopefully. I don't know. I'm not an expert in commercial real estate, but we'll have to wait and see. And then the bull case long term. Every week that goes by, I get more and more optimistic on on all these things. When it comes to AI, the rate at which things are moving over here is incredible. The things that you can do, and we're just getting started there. The cost of computing power. NVIDIA just released their new chip, H200 chip. Cloud computing. Something's got to power all the AI, so that's killing it. The Web3, the creator economy, is booming. If you look at Shopify, if you look at Facebook ads, if you look at Snapchat, if you look at all these different, creator economy platforms, they're doing really well. They're doing really well in spite of all the crap, right? The interest rates, all the stuff. They shouldn't be functioning as well as they are, and they're doing great. Electrification of the world, that's still moving ahead. So those things are all looking good. Still, long term, bull case kills the bear case. The bear case is a few things short term, and we're getting through those things. That's what the market is saying as well. The market's telling you things are looking better. People are becoming more and more optimistic. So that is all great stuff that's happening. When we look at opportunities to look out for, cash and bonds, RIETS, know what you own. The REITs are beaten down. Know what you own. Don't just go buy any REIT. Don't go buy WeWork REITs or whatever. Selling options. It's okay right now. It's not the best, especially when we've had this crazy move to the upside. It's not a terrible idea to hedge yourself by selling a call against your stock. The problem with that is that the premiums aren't that great. So this I have in orange. It doesn't get me super excited. When we were down in the dumps, selling puts was great. But that opportunity has passed, and now we're on the other side of that where we are to an extreme to the upside. So selling calls would be the preferred method, but it doesn't look that great right now. Tech and semis dips. Wait for a dip. There's no dip right now. Have a plan. Don't get shaken out. I hope you didn't sell at the bottom, because we may have another bottom. Who knows? But have a plan. Things I'm buying now. This I updated over the weekend, so these prices are going to be a lot further away than where they're at now. I do want to buy more Tesla at 200. I do want to buy more SMH at 150. I want to buy more Qs at 160. I don't even know where the Qs went today. Where'd they go? 385. So we'll see if I'll get these opportunities. But definitely the Qs is one that I'm dollar cost averaging in. So maybe if I don't get the 360, I'll have to dollar cost average at a higher price. That's okay. But if we do get back down to that 360, I'll put a lump sum in at a better price. Bitcoin, I'm buying the pullback if we get one to 35, which I think today it was down. TLT, I'm buying. I bought some today. I bought some yesterday. I bought some last week. So we'll have to wait and see on that. Long-term holds, ENPH, I'll buy more at 65. ENPH had a great day today, so that's a relief. VICI had another great day today, but I will buy more at around 27. And Amazon, I still need to finish one of my portfolios. I need to finish the position for Amazon, but I'm pretty fully loaded up on Amazon. But this is one where I think it's a sleeping giant. All the stuff I'm seeing with AI, Amazon, AWS, Microsoft Azure, they're going to run all the programs. They're going to do all the computing for AI. So if Amazon can drop to 135, that'll be my next purchase. Even though I was buying it a lot lower than 135, I just don't think we're going to get back down in here into the 120s where I was scooping up a bunch of Amazon. I don't think we'll get back there anytime soon. So I will be looking to buy at 135. So looking for a little pullback there. And then when we look at things I'm watching, Google. I think Google got unfairly punished after their earnings. This used to be one that I had a big position in, but I actually sold it to use my profits to go buy more Amazon. So Google right here is not a bad buy, in my opinion. So I'll be keeping my eye on Google, and I'm keeping my eye on PayPal. I said last week I may buy some PayPal. I did not. But I'm still interested in PayPal. So we'll have to wait and see on what I do there. But those are two that I'm looking at right now. If I had a gun to my head, needed to buy something, those would be two that I really like, along with TLT. And I am buying Bitcoin for the long term. I think we're at 35 right now, so I might go get some right now. Look at that. We're at 30. Ooh, look at that. Come to Papa. Again, this is not financial advice. Be an adult. Do your own research. Make your own decisions. This is just my thought process. Again, we've gone over the TLT bullish trade, and that's looking really good right now. I still think there's a lot of time for this bad boy to evolve. So again, this was last week or so that we talked about it. Inflation has peaked. Looks good. Economy is slowing. It's slowing. It's not ripping. It's not tanking, but it's slowing. Cash on the sideline. We've already gone over this. I'm not going to do it again. So that is looking good. Now, who knows? things can change, but for that bond yield to really change, we're going to have to see some crazy inflation, some crazy employment, numbers, which I just don't see us having that. So I think we're kind of in a little bit of a Goldilocks. I say that with quotations. I just think the market's in a good spot here. There's a lot of money on the sidelines. People are going to have to start putting money to work, and with yields going down, there's going to be a more skew to lock in those longer duration bonds and to get into some other assets, because there's a lot of people that have been sitting out this rally. So that's all I got for you guys. Today's the day to sit and look at your portfolio and just don't do anything. Don't go buy big green candles, buy red candles, and just have a plan. Here's my plan. Come up with yours. If you want anything specific for me to go over next, put it down in the comments, but that's all I got for you guys today. This went on way too long, and I appreciate it if you're still here watching. Peace out.